What is going on, my people? It is your main man, Charles Tank Harris. So you know what it is. It's Wild Wednesday. It's the Financial Power Hour, and we're ready to do what we do. It's Wealth Our Way Wednesdays. You're tuned in to the Wow Network. Let's get it. Long story. Where do I start? Let's begin with the interesting part. Mean streets, eroded defeat is what taught me to speak from the heart. Many choices, few of them good. That's how they keep us all trapped in the hood. If I could write a rule book for my people, I thought we could escape from there where we stood. So here I am giving content to you along that with what you should do. I'm here to speak wealth, to provide you help to get it started for your family, yourself. So sit down, turn up the sound, lay back with your feet off the ground. You've tuned in to the best in the streets. Wealth away, I have the world at your feet. Let's get it. Financial Power Hour. Good, everybody. Welcome to another episode of the Financial Power Hour. Today we are talking about Black people and taxes, because it's that time of year. It's March. April 15th is the tax deadline for individuals. Of course, if you're like Big Tank, you might get the extension, push that thing out to October, but do not fool yourself. The IRS wants their money on April 15th, and we'll talk about that with some real pros today. Speaking of my guests, let's just start it. Let's just get the guests rolling. Let's tell you who I got here, because I'm blessed today to have two great tax professionals. First and foremost, I have Miss Alexis Sidney. Now, one of the things that very few people know, especially in the Black community, we think about tax preparers, tax professionals, and we're often talking about CPAs. Most people don't even understand what a CPA is. Fortunately, today I have one with us, but I also have Alexis, who is an EA. So I'm going to let Alexis tell you a little bit about who she is and what an EA is before we bring on our next guest. Alexis, welcome to the show.
Thank you, Tank. Thank you for having me. And I'm so happy to be here today. Again, as Tank said, I'm Alexis Sidney. I am an enroll agent, an EA, and I'm not a CPA, but an EA. I'm also an accounting advisor, and I handle all things that accountants do. So let's kind of roll back with the EA. An EA is an enroll agent licensed to practice before the IRS. So I went through a bunch of exams studying for like a year. And then I took several exams to get a license to be able to practice before the IRS. So enroll agents specifically deal with taxes. I have some CPA friends who don't even do with taxes. So a lot of times people think like, I need a CPA. You need a person that specializes in taxes. So an EA can definitely help you with those needs. CPAs help you more with audits if you need an audit, or they can help certify financials. But accountants, everyone, for the most part, they do accounting, they do bookkeeping, they do taxes. We can all do the same things. It's just some of us have some credentials and we're held to a higher standard because we have these licenses behind us and we have to, stay in regulation, and others, they don't. So find a good person that works for you. But like I said, I handle all things that accountants do. I am licensed in insurance. I'm also a realtor, and I'm a certified profit first professional. So my goal is I work exclusively with real estate investors, brokers, and agents, and I help them unlock financial clarity and open the doors to greater profits within their business. So that's a lot about me. Again, I love doing accounting. I love doing taxes. I love having these type of conversations. I'm located in the Atlanta, Georgia area and been doing taxes for over 18 years now. I know I look young. I started in and never left the game, but it's awesome. And I'm here and I look forward to the conversation tonight. So I'm going to turn it back over to you, Tank.
Thank you so much. And Alexis is a repeat offender of showing up on the Financial Power Hour. We love having her. We're going to keep bringing her back every year. This next brother on the show tonight, I'm blessed to have him on for the first time. This is a cat that I met in a networking group, And then we were talking about this before the show even got started tonight, both Alexis, myself, and our next guest, that the pandemic has changed how a lot of us do business. You can develop really good relationships, especially professional relationships, without ever being in proximity with people these days. Thank God for technology. Brother Larry is one of those people. So Larry Pendleton, CPA, and we'll have him come on and talk about the CPA designation and what he does and how it differs from an EA designation. And Brother Larry and I met in a networking group that my producer introduced me into. And we just kind of kicked it and talked offline. And I love what his passion is not just tax work, but real estate, which I won't steal his thunder. I'll let him explain that to you. But it's that support. And I like to go off on tangents when I'm on the show. There's this underlying falsity, this false narrative that in the Black community, we don't get along. We can't help each other. We can't support each other. And especially as it goes gender to gender. So, they say Black women hate on other Black women and Black men can't get along. Brother Larry is the first person. If I post something on Instagram or Wealth Our Way, Brother Larry is first person to, hey, I see your content. Love what you're doing. And that has always resonated highly with me. And I kept saying to myself, the first opportunity that I have to work with, refer to, or have on the show, I'm a reach out to Brother Larry because it has to be reciprocated, the love that he has shown me thus far. Welcome to the show, Larry Pendleton, CPA.
I appreciate it, Tank. Grateful to be up here. Nice to meet you, Alexis. Looking forward to this discussion. Yes, my name's Larry Pendleton. I'm a certified public accountant based out of Southeast Virginia. My mission, which I made it the mission of the business, is to help people achieve financial freedom through real estate investing and tax strategies. It was pretty funny that Alexis mentioned like having CPAs as clients that don't do taxes. I actually have CPA clients as well, and then I try to explain to people. CPA, like I said, doesn't mean like even if it's a role agent or a CPA, you still have to find the right person for what you're doing because the tax code is rather extensive. There's a lot of information. I've been grateful to practicing it myself for over a decade now. But like I said, I've seen so many situations where people are kind of picking the wrong person for what they have going on. So even me, like I have to turn people away. Like I don't do taxes with that, or I don't do with audits. But like I kind of dig myself into this niche, especially with real estate, because I'm also a real estate investor as well. I'm co-owner of over 60 doors across the country as well. And part of the reason why is that because I see how real estate can help save on taxes and help generate wealth for people, especially in our community. So looking forward to tonight's conversation and adding value where I can.
I appreciate that. So here's some of the organic things that you see on the Financial Power Hour that are not scripted. So one of the things that I have branched into is the cannabis space. And I've said it on the Financial Power Hour previously and in 15 Minutes of Finance. Working in Jersey, I have taken on the role of Chief Financial Officer for a cultivation and manufacturing company. I've also started to pursue a license to get my own retail dispensary for my family and a couple of other operations. So one of the things that we've been looking at is the decision to lease or buy. And in leasing or buying, if we're buying, whether we wanted to buy an already existing structure or buy a piece of land and build on it or put a modular unit on it, all of these things, the way the tax code is very heinous against cannabis. So cannabis is still considered a federally illegal product. As such, you don't get to deduct operating expenses. It's called a 280E of the tax code. And as a result, it makes a lot of financial sense to separate your real estate from your business. So we're looking at setting up one entity to hold the real estate and then have the cannabis company rent from that entity. And Brother Larry, I'll be reaching out to you to get the best ways to make that pop off. So that's just some organic business that just came to mind that I know I got to roll with my man Larry on getting this empire started for the Harris clan. So
that's not unusual for just other industries, even like legal industries. I have attorneys who buy their actual office with a separate entity for the aspect of, okay, the asset itself, like I say, is going to generate its own set of issues or I guess liability. Do you really want that in your in your corporation for your S corp. So even without the whole legal versus illegal aspect of the business, I guess it's pretty consistent. People having their assets in separate entities from the main income generating business.
See, I'm glad you already green light that I thought properly. See, it's impossible to know everything about everything, even in a concentrated area. Like, for instance, finance. I was speaking to someone the other day about what it meant that I was the chief financial officer of a company, because I was speaking to another chief financial officer and his background is in accounting. I know absolutely nothing about accounting. Our controller at the company handles everything accounting. I handle raising capital to get the operation functional. I handle what investments make the most sense for the company to move forward with, what's going to increase our bottom line as a company. But I don't do anything books, taxes, none of that. So it's amazing that when you are in the financial space that you can go through the discipline of real estate, or you can go through the discipline of stocks and bonds, or you can go through the discipline of taxes. Even in the accounting realm, you have some people who, as Alexis alluded to earlier, do bookkeeping, but don't do taxes. So before we get into the some will say comedic subject matter that we'll talk about this evening, Alexis, can you shed some light on those different avenues, the difference between bookkeeping and accounting and tax prep and tax planning?
Definitely. So I love to say that tax planning is something proactive, something that you should be doing well in advance. I always tell my clients you shouldn't roll up to the deadline, which is if your corporate return, which is 3/15, and have a surprise on IO. Like, it's a surprise. Like, why is it a surprise? Because you're not doing tax planning. And tax preparation is reactive. Like, you get your documents. It's either April 17th is when it's due this year, or March 15th for the corporate entities, and you're filing. Like, I tell my clients, you give me your documents. If you didn't do any tax planning, well, I'll see what I can do. Is a charge for it, because tax planning is not a part of me preparing. Getting those documents, your W-2s, your K-1s, whatever mortgage statements, whatever you have, and I'm simply filling the return, preparing it, preparation. Bookkeeping, definitely something as business owners you definitely should have. You should have clarity on your finances. I can't say how often I talk to business owners and I'm like, oh, they want to prepare taxes. That's fine. What are you doing to capture your income and expenses? Are you using the accounting system? No. Okay, so we gotta now figure this thing out to know how much income you're making or how much you expense out. But then on top of that, that leads me to know that they haven't paid no estimated quarterly taxes. They don't know where they stand. And so it's just all over the place. So, bookkeeping is going through, looking at your stuff, categorizing your income, your expenses, making sure that your assets and things are accounted for, making sure that if you have loans, they're on the books, and you're, reconciling that stuff as well. And you need that, because I don't know, from a business standpoint, like, how do you know your true numbers? How do you know where you stand if you only do books for taxes? It's only important when it's tax season, let alone throughout the year or throughout the months, or, week to week. So, that's my take. Get you some tax planning. Know where you stand. Your taxes should never be a surprise. If you're having that tax plan and meeting with someone quarterly, because you can't also do a tax plan at the top of the year and then your business is ebb and flow throughout the year, and you still got that one tax plan and you didn't made all this extra money and didn't account for it and adjust for it throughout the quarter. So, definitely do yourself a favor and get you a professional. Not all people do tax planning. And if your tax preparer doesn't, you need to find somebody who does, so they can help you with, making sure you have the right entity structure set up, making sure that you got the right, as we say, loopholes or tax plan or whatever you got going on. Make sure it's accounted for. Because I see people now, they show up, it's tax season, and they show up with their own tax strategies, like hiring their kids, and let's just say it wasn't set up throughout the years.
So that's a great segue. First and foremost, before we segue into our first topic about how our people handle tax time differently, Brother Larry, do you want to chime in on the different aspects of the tax field, from planning to prep to the different strategies that are available?
I think first and foremost, it's a mindset that people have to go into it, where you have to know that the planning does not start like during tax season. Like, that is too late. If we're trying to plan for the prior year, it's like there's some stuff you can do, but the ship is sailed on a lot of different opportunities. So what people really need to know is, like, one, like, you're not going to be able to handle this all by yourself, and the reason why people are so reactive to it, not being proactive, is because they fear the tax code itself. But there's great opportunities because the tax code is made for business owners and landowners. Like, that's how it's always been, like, far longer than any of us has been around. So to know that, and like, then you know how that game is set up, then you can operate differently. And then also know that no one is creating tax savings by themselves. It's a team sport. And yes, that means you have to pay a professional to help you with that. You're not going to meet someone like Alexis throughout the year, and they just giving you an hour of her time every time for free information. Like, whoever you're meeting, if you're not able to generate at least 3 times as much as tax savings, you're not working with a true tax advisor from that standpoint. So I think, because from us, we're technically are using the prior year tax return as the basis of the planning itself. So if we're filing now, we're already planning for 2023 based off what you've gotten done, and then what has occurred throughout the first quarter. And then as you meet throughout the year, hey, we sold this, we hired this person, we had a kid, so forth and so forth. If you want to bring kids into the business, there is opportunity to do that. It's just, is it done properly? And just making sure that's done in place as well. So, and then you get into the actual fourth quarter of, okay, what are the final things that can be done to ensure that you know what you're looking at during the next tax filing season. And then so now you're all kind of set, you know what your numbers are, and kind of.
So what I'll say is this, and to get back to what we're here to talk about tonight, is how different communities may feel a little differently about how certain things get done. I know where I grew up, and I'm not far from where I grew up right now in Philly. It was always trying to survive. We have a hustle mentality. We are just trying to get through the next situation. I know I saw something the other day when they were talking about the impending recession, maybe even depression that could be in front of us. And there was a saying that I saw on, I want to say it was Instagram. A Black person said, when you are already drenched in poverty, the outside financial environment doesn't shape or alter your existence at all. That you don't understand when the economy is in a boom. You don't understand when the economy is in a contraction, because you just was day to day anyway. And we are always trying to find ways to get by that day to day situation. One of which, and this is the first topic we're going to talk about, is going to bring some smiles to all our faces, is the concept of claiming other people's children at tax time. I saw a skit on the internet the other day about weekend dads, and the guy picked his son up at the very latest time he could get him on Friday. Soon as he got his son, he took his son to his mom's house, was like, "Mom, help me with the baby." And then when he goes to drop the baby back to his ex-girlfriend, he says, "Can we split claiming him this year?" And I just found it funny is that I've been in a situation where I'm divorced, I've had minor children, and that becomes a real issue. Who gets to claim the child? That's one argument. But when you're sitting here making up people to claim, or calling your cousin who you know don't make as much money as you and asking them to claim, how much experience do either of you guys have with dealing with, are these all your kids on this return?
I don't got those type of clients anymore, but once upon a time, back in the day, I used to deal with that foolishness. And yeah, it's it's really interesting how people claim people kids, or they try to, or they come up with all this creative stuff to claim other people kids. But, in fact, it was so funny. One time I was at a school and I was doing a financial literacy program, and the kids was asking questions. We was talking about money, but we was talking about it in the standpoint that they can relate to it. Like money is moolah and all the names of money. And, it was real fun. And then the kids was like, my mama be claiming other people kids on their tax return. Is that ethical? We was talking about ethics. And I was like, oh Lord. So, it happens. I would definitely say, be clear, because over the years, the IRS has got hit to that. And I know that at one point they were running, the databases between the, I think, Social Security and some of the other systems for public assistance or whatnot, and kind of starting to flag people, cutting down on that type of activity. And I've seen a lot of people, doing that, get caught and, have to pay the money back. And now you got to file a special form every time you go to e-file because you got caught in a situation. Or I've even seen some families, going blow to blow because you said I can claim such and such. And then you called the IRS and told them that, I couldn't claim them, and now I got to pay that money back. And seeing some family feuds in real life. So it's a mess, but thankfully I don't have too much of that now. I've grown over the years, but been there, done that. It's funny.
Brother Larry, what about on your end?
So I was about to plead the fifth, but it's similar. And Alexis would probably relate to this as well as a tax advisor. As you're just starting out, you're going out on your own. You're starting your own business. You're accepting, like, you haven't set up particular like guidelines, like pre-qualifications of clients. But you're trying to make money and just trying to get anybody in that's willing to accept your service. So yes, I do recall this kind of times like that. This kind of always questioning clients like, are you gonna be able to sleep well at night doing this? And it's going back to you're being reactionary to trying to get deductions where, okay, like it may just be best to kind of take that hit versus and kind of plan going forward. And we have they're in divorces and then they're doing alternate years, and like that's all fine, but to actually claim someone else's, unless you can legitimately prove that you cover like more than half the kids' expenses, they're living with you for a certain period of time and all of that. So it's definitely something that I try to move away from, or just kind of flag when I'm doing pre-qualification for clients, where like it's not really worth it to put my license and my company at risk just for you to get a couple of $1,000 credit or deduction. And what was the overall end goal when it was all said and done? Because you would do the exact same thing next year, and we gotta play this game all over again.
I like that Alexis had touched on when you get caught or when the IRS is tracking. What people don't seem to, sometimes maybe they don't care, but more often than not, it's just a function of ignorance, where people don't realize that someone has all of the data and you are purporting things to be a certain way. And yes, there are a lot of people in the United States that pay taxes. And I think people count on the law of large numbers. They can't catch us all, or they can't audit everybody. The IRS has spent a great amount of money over the last 12 months to bolster their legions of people who are able to catch tax cheats, so to speak. When you start to behave a certain way, and it brings me to a second question I want to transition into. When you behave a certain way to take advantage of taxes, in most of the cases, because, and I'll keep it very high level for members of our audience who don't have their calculator handy. When you are reporting to the IRS at the end of the year how much money you made, and your tax rate is going to be some percentage of the money you made. You can lower that overall number by reporting a lower income or being in a lower bracket. That's really where the math comes into. It's A times a certain percent equals B. That's what your taxable liability is. With that being said, I see people, especially my business owner clients, who want to minimize their monies, their income, their net income when it comes time to paying taxes. Conversely, though, when it comes time to needing a loan for something, when it comes time for, qualifying for something that you need to have more money for, now they want to raise how much money they make. It takes me back to the movie The Five Heartbeats and Big Red keeping 2 sets of books. I have seen firsthand the ramifications of getting caught at that. And ironically, it was another accountant that I work with quite a bit, that I deal with and know well. He was telling me a story about one of his clients that was claiming his income was a certain level for tax purposes, then went to apply for a mortgage at Wells Fargo, claimed his income was significantly higher, and for whatever reason, the right hand was talking to the left hand, and he had to sit in front of the IRS people and realize, now I'm liable for this explanation. And he ended up getting some serious repercussions to that, because there is a difference between tax avoidance, which we should all do. We should all try to lower our taxable amount that we pay out of pocket, and tax evasion, which is illegal. And he was caught and tried with tax evasion and spent some time, in a nice orange jumpsuit. So what are your thoughts on keeping 2 sets of books? Do you caution against it? Has this ever been something that you've encountered?
No, I can't say that I've had people keep 2 sets of books. I can't say that I've had that. They either don't have no books, but not 2 sets. But I do see people in this, like you just mentioned, where they're trying to do stuff and they're self-employed or whatnot. And, for tax purposes, because they didn't do what they were supposed to, but paying estimated taxes, now everything's a write-off to avoid paying the taxable liability they're responsible for, versus doing the right thing and paying the taxes. So now you look good on paper, so that you can get the loan, or you're more valuable to a company, versus for the past 5 years, you got a loss and now you asking me for some money. So it's a right way to do it. You just need to do it the right way. One thing that I have seen, and I'm sure Larry can probably say he's seen this too, dealing with people who are self-employed, is that they'll file their taxes one way, or at least try to, for the purpose of getting that home or that loan, to show like, yeah, my business made all this money, and not writing off the liabilities or the deductions. But then when they get their loan or they get what they need, they'll come back and try to do an amendment to now report the deductions and all the stuff that they didn't do. So, I've seen a lot in over these years. And the thing is that you don't have to be that way. You have to educate yourself as business owners, especially, to have a plan in place and do what's right. Because if you're in business to truly be in business and really take it to the next level, like, who is going to even give you the time of day or give you any money if they're looking at you and you're just a loss? You don't have to do it that way. That's not the right way to do it, to avoid paying taxes. And then I see people, sometimes, or seen stuff where they have income and then they'll max it out so that they can get earned income credit, because they have young kids that are under the age of 17. So it's like, let me get to under this earned income level with my business so that I can get the credit that I'm not really eligible for, but I'm going to figure something out or get creative. So it's a lot of game out here that people can really get themselves jammed up in.
Larry, you got any situations similar to that, with whether it's keeping sets of books differently, or, as probably more eloquently said, the way Alexis said it, keeping 2 sets of books does require a lot of work, and we do have a lot of folks that don't even keep the 1 set of books. What I more so mean is altering the scorecard, like she basically said. Today I'm a millionaire. Tomorrow I'm on welfare.
Yeah, and I mean, I think people really don't realize that when you work with a lender, like they're very rarely are going to go off of the tax returns you're handing them. Like you're going to have to go into, you have to sign some documents. They'll pull your tax transcripts themselves so they can see what you're actually been reporting all this time. And then if your numbers just automatically look completely different based on the timing of the year, like they're going to flag is like, why you look this way when filing. Then the whole aspect of, hey, we're going to show all this income, file, not pay, and then amend. Like I say, it creates more of a headache. Whereas like, hey, maybe you should probably just be elected differently for how you filing your taxes or acquiring some assets along the way that can create some additional deductions that, I mean, without getting too much in detail, people don't realize like lenders need to be backing out depreciation because that's not operational expenses. So that's a huge opportunity to kind of buy an asset that's generating cash flow and generating deduction that's not going to be affecting your loan. So like I said, it's just all about kind of adjusting. But yeah, if my clients can have 1 set of clean books, like I'll be completely shocked they have something on the side.
I love that insight and information. And it's interesting. So let's not keep picking on our people and saying what they do wrong. Let's talk about the cause behind why they do wrong sometimes, So one of the things that has become very clear to me over the course of the last 6 months working in the cannabis space, because the cannabis space is so heavily regulated, we literally have a legislative appointed body that looks into every move we make. And thus it's forcing us to run the business as concise and clean as it can be run. Not that with the team that I have in place, it wouldn't be run that way, but even areas where I thought I was doing something right are being brought up to me now to maybe say, that's not how this should be handled, and we want it handled this way. I believe that a lot of Black business owners, the ones that I deal with and have encountered, have spoken to, who have reached out to me in email or instant messages, there's a level of mistrust in the general economy. There's a level of mistrust in America as an entity. There's a level of mistrust in the financial system. It seems as if there's ever a demographic to kick and treat poorly, it's normally Black folks. So as a result, we kind of justify our bad behavior sometimes because we like, this is the only way I can fight. They don't do this to other people, so I'm going to make sure I protect myself. Have you encountered that mindset with anybody, that justification? And if so, how do you address it? Let's start with Larry.
Yeah, I've seen that mindset before in our community and in others as well, especially the lower income in other communities, and part of it is also just really a lack of understanding of how the tax code is kind of meant and set up to be. Like it is, and people don't like hearing it, but I always repeat it. It's not. It has never been. It most likely never will. Like they give you small opportunities, like writing off your home mortgage if you have enough itemized deductions and all that good stuff there. But if you don't fully understand, you start to try to find different ways to justify the things that you're doing is right, or that the IRS or the government owes you for whatever. But if you're kind of more aligning yourself to what the code is actually doing, and so I try to tell people, like, if you align yourself what the code is actually doing, there's more opportunities to sleep better at night, knowing that you're actually and save on taxes because you're operating the way they want you to operate. They want you to be a provider for the masses, not just for yourself and your family. If you're doing more, if you're providing jobs, providing food, providing housing, like the tax code of exemptions and credits and deductions open up tremendously for anyone, not just the ultra wealthy from that standpoint. So I try to get people out of that victim mindset, and like rightfully, I mean, and it's rightfully so. Like I said, it's no reason why not to believe it's not a rightful thought to have, but you can't get too drawn in there, and then you start doing stuff incorrectly or inappropriately that can get you even more trouble.
I appreciate that. Alexis, you want to chime in there?
Yeah, definitely. I agree with what Larry was saying. I think that, it's a lack of education, because when you get to a certain level of, financials or finances, and you're able to really tax plan, I don't look at it as a black thing or a white thing. I'm looking at, like, what do you have, like, income wise, and who are you surrounding yourself with as far as your team to be able to help you navigate through this. I always go to, we ain't talking about Trump, but the Trump tax plan, and I constantly had people coming to me when that came out, like, I want to pay $7. I want to do this. He did it. And I'm like, and he also had a bunch of tax planning people around him. I'm not saying everything was right, but I'm saying he had a team of people there helping him strategize and figure out this and that. And it's definitely a mindset shift. They're thinking, or I saw some people taking on the approach of, I want that too. Well, for one, you're on this level right here.
You're not making them Trump dollars right now. So come on now. Not with the comparisons.
Work within your level and get help with what's there. But when you do get to a certain level, another level is about education, about educating yourself. Because I see people who, they may not be making, millions and millions of millions, but just as simple as people who, make decent income and they got properties and, they're doing stuff and they're able to generate money or whatnot, and just building their portfolio with different properties, and you go sell the property and you don't get it into a 1031 or something, now that is taxable. And just that small stuff. And I've worked with clients recently last week, and I'm like, why didn't you have a conversation? Like, what? And now they're freaking out because it's like, oh my gosh, I hate to see what this tax bill is going to look like because we couldn't find a property. But just small stuff like that is planning and strategize to be able to shift that income into something else like kind, so that you don't have to carry over a capital gain. So we just need to work with what we have. There's something for every level, and just making sure that you're doing what you need to do, and like stop having the attitude like some people have, like they owe this to me because such and such and such. But taking a more educational point.
Can I piggyback on what Alexis?
Oh, by all means, Larry, go ahead, bro.
So on top of what she just said, is also when she mentions like self-education, they're not going to teach it in schools. They're not. The school system is not made to produce entrepreneurs, business owners, landowners. It's meant to build employees. Like we know, and if you're fully aware of that, and I feel like I don't know how many times I hear this year after, like, why don't teach it in school? Like, okay, now that everyone's fully aware that they're not teaching this in school, that does require self-education and partner with people that can help educate you on that stuff as well. I'm not trying to turn anyone into accountants. Like I wouldn't recommend it, unless you're a psycho like me and Alexis. Like I wouldn't recommend it. But if you're not, okay, there's the time to, whether you want to do YouTube University, Google, just random Google stuff, like starting somewhere to get educated so that you can know what a 1031 exchange, what qualifies for something like that. Knowing that if you just flip a house, you can't flip a house into a 1031. It has to be a long-term investment. What does all that mean? That's where self-education, working with advisors that can help you with that. So like let's quit with it is on us to control our financial freedom here.
I appreciate that. And two things that I wanted to do. So 1031 exchange, I got familiar with that back in 2000, 2001, when I was heavily investing in real estate in Philadelphia. It's basically allowing you to take the proceeds from the sale of one piece of real estate and move those funds into your next purchase. There's some criteria that is involved. It's not every transaction doesn't qualify, but if it's a proper qualifying transaction and done inside of the qualifying time frame, then you do not pay taxes on that transaction. You carry those taxes. The thing about what Larry said earlier before 1031 exchange was even brought up, I wanted to touch on, which is the tax code. And this is why I'm not mad at the tax code. The tax code is kind of how I ran my children when I was coming up. You know, when I grew up, and I'm going to date myself, not that the gray beard doesn't already do that, but we were dealing with the gas crisis of the 80s. We were dealing with Cuba was showing its ass. And so we put all of these embargoes and tariffs on it. And the funny thing is, we talk about physical war. America goes to war a lot to stand up for certain principles, protect people, or to increase its own interests. But war is expensive. A better way to get your way with people is financially, through tariffs, through embargoes, through sanctions. And those are all financial terms that you need to educate yourself on. I do it to my children. If my child does something I want them to do, there is a financial reward for that. If my child does something I do not like them doing, there is a sanction, there is an embargo, there is a tariff. I control them through the finances. And that's all the IRS code is doing. People on this program know that I used to play blackjack professionally. And blackjack, gambling in general, I don't like to consider blackjack gambling, but, we won't argue that here. Playing cards is not favorable by our United States government. As such, it is not just not given tax benefits in the tax code, it is actually taxed heinously. It's taxed in such a way to persuade you not to do it. And I'm surprised that the gaming industry, which is hasn't lobbied successfully to get some of these tax laws changed, because just dealing in cannabis now, you are prohibited from taking certain deductions, categorizing expenses in certain ways, recording income in certain ways, because the government does not shine its beautiful light on it. Conversely, the topics Larry talked about, owning real estate, being a small business owner, being charitable, these are things that the government wants to promote. Well, how do you get somebody to do something? Give them money for doing it, or give them a break for doing it. And that's where Larry is referring to understanding the IRC, the Internal Revenue Code, understanding where you can get your bread buttered better at. That's where the start is for all of us, through that level of education. So I want to say kudos to both of you guys for touching on the education element of it. In this day and age, as this program is, free information for people who want to learn. And all you have to do is go on Google, go on YouTube, and use your thinking brain. Everybody's not for you. Alexis joked about it earlier. The number of people who have told us to hire our children in our business and buy a car over 6,500 pounds for our business is infinite. I can't name them all. Are both of those things legally accepted and great planning tools? I say yes, but for certain people they are. They're not for everybody. Buying a car or an SUV that weighs over 6,500 pounds and claiming it as a business vehicle when you don't have a business that requires you to have a vehicle is a recipe for disaster. So will one of my two accounting friends on the air talk about customary and necessary, or what are the two terms that the IRS looks at when they're giving you the ability to deduct certain expenses?
Ordinary and necessary.
Right.
Ordinary and necessary.
Don't
let
the tax tilt wag the investment dog. Like, yes, you got this nice write-off for this G-Wagon this year, but you still got to make payments on that year after year after year, and only the interest is deductible, like, and you guys still pay gas, like, and you got to do all this mileage tracking and all of that. Like, if you're about doing all that, I mean, that's fine, but you bought something that's worth more than is going to be flagged. So yeah, I gotta tell people like yes, these are all legitimate strategies. Yes, you can hire your children, but what's the market rate for them just sweeping up your home office? Like, it's not $12,000 or whatever the exact standard deduction is. Like I said, and you got a 1 month old, Okay, you're not about to put them in commercials. So what other work is your 1-year-old doing from there? So, I mentioned Google and YouTube and all the other platforms, but those are shotgun approaches. Like that's just like, hey, here's everything that's out here. You really have to get sniper-like position to like how all of this stuff, how does it affect me? Because if I split my life in half, like I'm a real estate investor, I go look at properties. Yes, I do a lot of miles, but I'm also a tax advisor. But I don't do a lot of driving, and I spend more time on this side, trying not to as much. But most of my time is on the tax side of things. So like I tell people, like people try to get real estate professional status, like it doesn't matter how many doors I own. Like I'm not a real estate professional because I spend more time over here. But you hear all this stuff online, and it's just like overwhelming amount of information. You have to know how to streamline that to you and how it affects you at that point.
Alexis, I want you to chime in on that, but I want to say one thing real quick. There's a great series on Netflix called Money Explained. It's 6 different segments. They're about 45 to 55 minutes long each. Very, very informative. And one of the things that Larry just said about hearing all of this advice on the internet made me think about one of the segments on Money Explained. Money Explained was asking, why do people, after all of this time that has passed on this marble, why do people still fall for scams and con artists? And the short answer is, we don't want to work hard for what we get. And if we can get something on the low, as we say in the hood, or on the quick, we're going to do it. Now, here's the thing, because Big Tank is lazy by trade, I'm a hustler, I'm a shortcutter by trade, I had to be able to sleep with myself at night. So I literally did the research to find out why I'm this way. I wanted to know, why am I so trifling? Why would I rather get something in 5 minutes than work for it for 5 months? Why am I this way? And I was pleased to find out, this is what education will do for you, that we are predisposed genetically to behave this way. This is how our early man, woman survived. You didn't have time to plan when your village was about to be bombarded or the Tyrannosaurus Rex was after you. You had to conserve as much energy as possible to get done what you needed to get done. That is still wired into our brain. Conserving energy is our go-to default mindset. When you see people, and I have a lot of friends, like all you got to do is turn the internet on and see people at the gym every morning at 5 o'clock working out for an hour and a half, and we're envious and jealous, they're mutants. They are not normal human beings. That is not how people behave. There are more millionaires that own gyms because they know they can charge somebody $9.99 a month and never use that real estate because they not coming. And that's the average mindset. And there's nothing wrong with us for being that way. So let's not compare ourselves to the person who got the baby oil on every day talking about look better naked. You know, the reality is that we're not going to do that. It carries over into finances as well. We cut corners for a reason. We are more concerned with going to see Beyonce next week than we are about how we're going to feed ourselves at age 80. And that is also predisposed into us. So what I want to spend the next 5 to 10 minutes of the program talking about is, how do Larry, Alexis, and Tank, how do we help people fight their normal human urges to be trifling by giving them some easy ways to do better for themselves financially?
Wow. Well, that was good. I'm sitting here like, dang, I was on the 5:30 a.m. gym run, but I fell off the bandwagon. So.
We all fall off that damn bandwagon. That bandwagon is not natural. Every time I see somebody like a Trey Songz, cat with his shirt off, and you can see 97 muscles, I ask for Trey Songz baby pictures. Show me when he was ever fat and he worked his way to that. He was not. He was normally a skinny kid that did 1 or 2 sit-ups and a bunch of muscles popped out. I know it for a fact because I have a 15-year-old son who looks like he is carved from a brick. This boy is muscular everywhere, and all he does is eat Hot Pockets and candy corn. Like, That's not natural. And I'm not even going to compare myself to that standard. Like, I'm good. But go ahead, Alexis. I'm sorry. I stole your thunder.
No, but how we can educate people or help them or give them some tips. Definitely just kind of, for one, have the mindset that you want to make something different. You know, we can share all the education, all the tips, all the recommendations, but I guess for me, what I'm learning when I work more with people is that, do you have the willingness or the want to really, you know, see something different for yourself, see something different for your business? Like, why are you doing this? And then I think if they're more receptive to taking heed and listening to the stuff that you share. So for me, you know, with small business owners, definitely, you know, start having a plan. Like, what are your plans? If you don't have accounting and bookkeeping in place, like, you know, really, you know, change that by working with a professional. And, you know, whether they're showing you how to do it, because I often hear the excuse, oh, I can't afford that. You know, I can't afford your monthly advisory package. So because I can't afford it, I'm not going to have it. I'm not going to do it. But there are so many different services out there. You know, they have some accountants that do the done with you type of stuff where, you know, you sign up, you pay low fees, you know, you get the help that you need, the support that you need until you know, grow to another level where you can now afford to have somebody to do it for you or take it to another level. But, you know, if you don't have the foundational things in place, you're not going to really succeed and get to the level in which you want to be or desire to be, because the foundation is not there. It's jacked up, screwed up. You have no clarity. So definitely start there. I work with a lot of business owners, especially with implementing profit first into their business. And even with a lot of investors or whatnot, you know, they get money in deals. And it's like, they're not like a regular retail business where they're selling a t-shirt or a candle every day. You know, they don't have that repetition of income coming in every day unless they're you know, doing their thing as an investor. I need to go work with them. But for the most part, a lot of these investors or things, for the type of clientele that I work with, you know, they get their money in deals, and that's not coming in every day. So I often hear them say, like, okay, I got all this money coming in, but it all goes back out. And they're not able to really get a hold on it to be able to invest, be able to get more doors, be able to get more properties, because they don't have a cash management system in place, or they don't know how to structure their money. You know, oftentimes people don't know what to pay themselves. You know, they're just whatever the magical number is. They don't know what to set aside for taxes. They heard it was 15% because that's the word on the street. You know, they're not controlling their expenses. You know, whatever they want for their business, they just figure it out. And then they're not setting aside profit or whatnot to pay themselves. So, you know, I always tell people or business owners, you know, my advice to you is get you some financial clarity, you know, get you a cash management system in place, work with someone who can analyze your finances and get you on a plan so you have clarity and you know what you should be paying yourself based off of the structure of what your business is currently doing. But you won't know that if you don't have books. We don't know the numbers, so that you can properly play yourself, so that you can have goals and dreams and have a number of the income that you're generating and shifting it there and setting it aside to whether it's pay debt off or whether it's to buy another property. But you're telling your money where to go as it's coming into your business. And then you have all the stuff set aside. So no longer will it be like how I hear from some of my clients or new clients is that I got this tax bill, but I ain't got no money to pay it. Now I got to go, you know, do something with this property to pay this bill, or take a loan out on this property to pay this tax bill. So it's so crazy. So any kind of encouragement I can give is get financial clarity, get you a cash management system, and know your numbers and have a plan of telling your money where to go and monitoring that, and not your money coming in and it's telling you what to do with it. So that's my share.
I appreciate that. Brother Larry, take us home with your answer to that. What can we give people right now to help prepare them financially moving forward? You know, some type of cheat code for life, because, you know, people need the easy way. What's the building block you would give someone?
First of all, I completely 100% agree with Alexis. All good points there. One thing I will add is a book I always recommend to people is Dan Sullivan's Who Not How. And I'm paraphrasing, but part of the book, it says if your goal can be accomplished by yourself, your goal is too small. So this somewhat ties into what Alexis is saying. Like, if you have the right people with you, no matter what the cost is, or if you have to find someone cheap, like, it's just getting the additional help so you can focus on what you're great skill sets of others who are stronger in areas that you are weak in, like doing the books, if doing the cash management. If that's not a strong suit of yours, that may not just be your passion in doing so, but that doesn't mean you have to fall short to the side. So, like, leveraging teams, I tell people, like, I don't do my own books. Like, I have a bookkeeper, and our system isn't perfect. Like, no one's like you, like CPI. Alexa's probably perfect because she's real Asian, but she's probably perfect with her stuff. But, like, I'm not perfect with ours. I'm still evolving our cash management with our bookkeeper. And, like I say, because the bookkeeping is not so much of a strong suit of mine, something I feel passionate about doing. I'm more about doing tax strategy with people and finding real estate deals. Like, that's what I want to focus on. So I always leave people like, that's a huge cheat code. Like, life itself is so much easier if you have the right partners. Like, whether it's raising kids, running a business, whatever, like, it's easier if you have the right team, the right support system around you, and you have to network in order to do that. You got to put yourself out there, reach out to some people, go to networking events, go to just whatever you got to do to kind of see who is the right person at the right price for you. And then as you build and grow, that person is going to evolve with you, or you have to step it up a level and find someone who's at that next level where you are. So I highly encourage people to read that book, and as well as just go out there, stop trying to do all this all your own. Like, no one is self-made. Like, I hate that phrase. I I think people internalize that, and it slows them down to the bigger and greater things that they can do.
I love that book by Dan Sullivan as well. Who Not How. It's a great book for me because I have a hard time divorcing myself from certain tasks. So now every time I see a new task, I try to figure out who else could do this besides for me. It speaks right to my laziness. Like, I don't want to do that. Who can I get to do that? I also like the E-Myth Revisited. It's a little overwhelming when you think about what Michael Gerber was telling us, is that every job that you do in your business, you should write out the job description for it, what title it is, and you'll be looking at 57 jobs, and you'll say, damn, I run a huge organization here, but I currently do all 57 jobs. But the minute there's some money, job 53 over there, I'm giving that to someone else. And if you keep growing and doing things right, one day you'll be looking at an industry that you are working with 56 other people because you hired somebody to do all of these tasks, and now you run a business. We got 2 minutes left. I want you guys both to tell people where they can find you at on the internet.
Awesome. Well, I'll go first. You can find me, Alexis Sidney, at I'm on Instagram at a.sidney_the accountant. You can also go to my site, www.the12firmonline. That's our link in bio. So you can go there, connect with us on all social media platforms. You can see any upcoming stuff that we have going on, and just check out what we're doing and stay connected with us. Thank you.
Love it. Larry, take us home, baby. Where can they find you?
Awesome. I'm on LinkedIn. I'm on Instagram. I'm on Facebook. Typically, all of them are just Larry Pendleton CPA. I think the link to my online bio is going to be in the show link. It's a link app, which is basically a digital business card. People can see other investment groups that I'm in, like Rise Equity. We will share a lot of good information regarding multifamily and investing itself. There's also a number of different platforms that I help consult on, different investment groups. So you can reach out to me there or on social media. So grateful for this opportunity, and thanks for having me.
I appreciate both of you. Can't wait to have you both on the show again. Wow. Well, that's why I named the company Wealth Our Way, so I can say wow after programs like this. I thank you both from the heart for being here, sharing this information. We need it. We're going to do better as a people. We're going to keep making this money. We're going to keep coming back and finding new ways on how to implement it, grow, and just create more legacy wealth. With that, we are out. See you next time. Thanks for tuning in to the Wild Network. For more great content like this, be sure to subscribe to our YouTube page at Wealth Our Way Network. Also, don't forget to follow us on IG and Facebook. Remember, wealth is not only for the wealthy.